This is Jeff Kohler, the Option Addict from optionaddict.blogspot.com. So I talked the other day about doing a video in relation to the quote Garmin trade. And I wanted to break this down as simple as possible, to be quite honest. I'm noticing a trend in a lot of the emails that I'm getting and some of the questions that I've been fielding recently, and I need to kind of break things all the way back down to the basics. So that's the purpose of this video here, is when you identify the trade and then planning your trade and trading your plan. And a lot of the questions I'm getting, I think a lot of people are just kind of shooting first, asking questions later. They're seeing that, the Option Addict's talking about Garmin, I'm going to hop in and just kind of follow along what he does. Well, you need to learn how I trade. That's the whole emphasis I put on the blog, is I don't go out there and give you receipts to what I trade, but I hope that you guys are picking up exactly how I trade. So I want to talk about Garmin here today and talk about the emphasis of why this was a trade. We see an ascending triangle price pattern. Excuse me. And if you look at this price pattern, we all know, or we should know, that chart patterns represent a consolidation at a point in a trend. This right here being an upward trend, the stock was really not moving higher. It was consolidating. It was just kind of taking a point to gather up some strength. And we know that a pattern like this is a continuation pattern, so that right now at the moment we don't see higher highs and higher lows. When the stock breaks out, we expect it to resume a trend of higher highs and higher lows. So what do? Well, with overhead resistance there, we wait for that stock to, quote, break out. And you can see that I have it highlighted at the point when Garmin traded at a new 52-week high. So from this point on, we expect the trend to start moving in higher highs, higher lows. Okay, that's all fine and dandy. I don't know what a lot of people were expecting. I think a lot of people were thinking that Garmin was going to make a 25-point movement in the course of 3 days, and that's just faulty expectations right there. But what do we do right here? Well, based on this pattern that took about 6 to 8 weeks to form, we would expect that in 6 to 8 weeks it would reach its price target, which was about 28, 25 points. I'm not being exact here, but right now, who cares? We need to give it time. And a lot of people, they're thinking, oh, well, it's down a couple bucks this morning. It's only up $1. It's only up 30 cents. I feel like I need to do something. I'm scattered. I'm emotional. I need to do something. And if that's the case, you have to stop trading like we're trading here, to be quite honest. You need to be patient. You need to let things work. Read some of my archives. I've talked about this type of stuff millions of times in my archives, and it always gets overlooked. When the stock breaks out, we need to be patient. We need to go back and rely on technical analysis. And one of the biggest points of technical analysis is that a common concept like trends are likely to persist, then reverse. Another thing that I use quite often in my price patterns trading is that old resistance becomes new support, old support becomes new resistance. I'm going to fast forward Garmin a little bit, and you'll see that it broke out. And what did it do? It reverted back to its mean. It reverted right back to that old resistance level. And if you've ever taken a price patterns class from me, this is supposed to happen. This is textbook. If you don't think the trade is going to go down, then stop trading like this. I've made the comment several times in many of my presentations that within the first 3 to 5 days, I'm always losing money in my entry point. I'm always losing money in the trade. Okay, but you have to be willing to give some profits back in order to make big profits. And that's what happened here on Garmin. A classic retest of old old resistance levels acting as new support. And stock still closing right at this level. And now we're starting to turn higher from this. In fact, if you draw that diagonal support line, we're just kind of walking that trend line as we speak. So there's really nothing wrong with this trade as of now. And I think you need to curb your emotion a little bit. Set it on the sidelines. Right now, as I initially spoke about this trade, the exit is if that old resistance line breaks, and that's right in the 104, 105 region. Again, to emphasize how do you draw support lines, because again, I want to make this extremely basic, is look at resistance. On my blog a couple days ago in the chat, I posted two charts, one that was a candle chart, one that was a bar chart, and I said, okay, well, tell me where you see support / resistance. Where do you see all the closing prices going? Here's one right here. Here's an opening price. Here's a closing price. A couple closing opening prices right through here. I like to simply go and change it to a line chart just to double check, and you'll see that there's a zone right through this region right about here, which again right about 104, 103, 105. It's that area. Remember, this is all about 1, 2, 3% of the stock price, so wherever you draw it, as long as you see it, it's not a big deal. But you need to answer that question before you get in the trade. What is your line in the sand? Doesn't matter what mine is, it's what is your line in the sand. And I used a couple charts here. I think this clearly illustrates where the support resistance area is in Garmin. So that needs to act as a place that we can get out of the trade. If we see it break down, if we see lower lows, then that obviously is not in tune with higher highs, higher lows, or new continuation of a Garmin trend. And also, I want you to keep that time horizon in line, which is about, like I said, 6 to 8 weeks is what this chart pattern took to set up. So that's what our time frame expectation is on the back end when we enter the trade. And back to basic concepts that I've always been teaching, it's all about low risk entry points. I like to take a trade as soon as it's near a support or resistance level. And in fact, my good friend Bob, he found a clever way of describing it. He calls it as REE, and that seemed to resonate a whole lot more than what I've been teaching. So no matter how you interpret it, continue to look for your low risk entry points. Garmin was a low risk trade because we got into this trade roughly at about 106, which meant there was only $1 worth of risk. You should have a very, very small position size because of market conditions, and therefore you shouldn't have a lot of emotion going on right now. Now, to head off the questions, what do I think of price action now? While I'm not excited about it, the trade is still not wrong, and that's what's important here. That's the bottom line. So until then, give it the wiggle room in which you initially set forth, and if you want to do something other than that, incorporate it into your trading rules. But what's really important here is establishing your plan up front. Create your plan and then trade your plan. So that's what I wanted to talk about here today. Now, a lot of these things I hope you're taking into consideration, because I know a lot of traders out there are still in the process of, quote, learning and establishing trading rules and creating a system. Try to expedite that as quickly as possible. If you're out there trading real money, well, you should have that plan in place first before you put a nickel's worth of your money into the market. Hell, paper trade for a little while. Use that to learn some lessons. But no matter what you do, plan your trade, trade your plan. Hopefully this has been some useful material for those of you that are in the Garmin trade, and for all the unanswered emails I haven't responded to yet. Hopefully this answers some questions. But as we see more topics like this, I hope to have the opportunity to talk more about them. This has been Jeff Kohler, the Option Addict. Please visit me at www.optionaddict.blogspot.com. Thank you.